Today to Canadian Mortgage Weekly Live, Canada's weekly video mortgage news podcast for July 14th at 11:30 a.m. We're joined today with Sam Thompson. How you doing, Sam?
I'm good, Joe. Thanks for having me on the episode. I'm excited to get into it today.
Yeah, really excited here. We're talking about how much does it cost to transfer your mortgage and at the renewal time. So let's get right into it because it's a very big topic right now. I know we're getting a lot of calls about it, especially just yesterday we had someone calling about it. So it was great to have that and great to talk to you about this topic today, Sam.
Yeah, of course. I think transferring and renewing is an important thing to cover because, like you're saying, people don't really know that part of the process. If they have a mortgage, they know, how they got there, how the process started. But the closer you get to that end of the 5-year term, it does raise some questions about, where do we go from here, or how does the next step sort of proceed?
You bet, Sam. That's a lot of the questions that we are finding our clients having. So let's just dive right into it. One of the first items we like to go over today on Canadian Mortgage Weekly is some of the reasons you might have to transfer your mortgage, Sam. And that's quite often mainly for just getting a better rate. Mainly, a lot of people do get very attracted to a better rate should they be able to find one. And look at getting a mortgage at a different lender if the rate is better.
Yeah, absolutely. That's definitely, one of the larger reasons that we see clients doing it is, again, trying to get, a better rate or maybe just different terms if they have, a change in their lifestyle, a change in their financial situation. Sometimes a different term might suit their needs a bit better. So we find, again, often it is just for that more competitive rate.
Yeah. And another option a client might want to transfer their mortgage is, going from a lender that may be a B lender to a prime lender, so an A lender. So in those cases, not only are they getting a better rate, but they may be upgrading lenders at the same time and getting a whole different type of mortgage.
Absolutely, yeah.
Yeah. So things to consider. Let's talk about some of the things to consider when you get to transfer your mortgage. Sam, what would one of those things be?
Yeah, I mean, it'd be good to consider and make a note of, are you in a fixed rate term? What are the conditions of your current term? How far are you into your term? Because a lot of these things, maybe if it is a fixed rate term, it is a bit of a set and forget type of rate. So maybe a bit of a refresher. I need to look at those mortgage documents again to, consider what the current, rate, term, and everything is of your current mortgage.
You bet. That's good points there. The rate, term, where you're at, because there could be a penalty, and the penalty could be massive. We've seen some clients that have really been prevented from moving forward because of the penalty situation, haven't we?
Yeah.
Yeah. We were just talking about that earlier too, right? Having a mortgage with a lower penalty would allow some more flexibility.
Oh, absolutely. Yeah.
So some of the costs involved, I know that's a big one when it comes to transferring your mortgage. Say, Jill and John walk into lender A and they really like the rates, or they get an offer for lender A and they really like the rate and they want to leave lender B. What are some of those costs that someone would run into?
So again, when we're chatting, we had just brought up the fact that there could be a mortgage penalty from your current lender. So that's, again, one thing to consider. And it's important to note, typically, if you're in, say, a 5-year fixed rate, you do get that stability and a bit of that set and forget mentality and ability. But again, it does usually come with a penalty. And in some cases, depending on the lender, it could be manageable or it could be very steep. So that is, it's if applicable, but it is a large cost that a lot of mortgage holders run into when they're looking at transferring to a new lender.
That is a big, large cost, yes. So when it comes to transfer your mortgage, a lot of the times the new lender will allow you to incorporate some of that penalty into the new mortgage at transfer time. However, sometimes there is a limit. So if the penalty is very large, then we may look at some other options when it comes to transferring your mortgage over, and we can look at that together. So mortgage discharge fee, that's another one that a lot of people don't really think about. That's in addition to a penalty. Now, this is a fee that every mortgage holder has. It's regulated by the government. But this is a fee, we have here a note saying it's between $300 to $500, and that's about what we see. It could be $395, $495, but it's roughly around that. And each lender has that fee, and that's just simply to deregister the mortgage from your title and remove that encumbrance, I guess they call it, though, and that whole administrative charge. So that's in addition to these other fees that we might run into, right, Sam?
Yeah, that's right. I mean, usually, when we're putting numbers together and calculating that for you, we'll try and, almost lump any sort of penalty and mortgage discharge fee into the one amount. But another fee that you definitely are going to see when transferring is legal fees to change the mortgage and file all those documentations. That's standard, whether you're refinancing, whether you're on a purchase or transferring, because there is a legal change that's happening when they're switching those lenders. So that is going to run you a fee. It might depend on also the complexity of the file, how much work is going to be required, the type of documents the lawyer's going to need. But usually we can see that between $2,000 to $3,000, again, depending on the bulk of the file, right? Like what types of documents and things are required.
That's right. I agree with you there. And that is another big chunk that comes to transfer your mortgage. However, a lawyer is required to do this. And, sometimes it is a legal representative, but it's also a very important job that's required for your mortgage and must be done correctly. So having a lawyer or legal representative do this is very important. So, yeah. Moving on to the next fee, we have appraisals, and everyone loves appraisals. That is something where a lot of lenders these days, actually, they do an electronic appraisal, or at least they try to mitigate any need for one. I know that we've done a few files with a number of different lenders where they've come back saying, you know what, we've done an electronic appraisal for this client, and we do not need a physical appraisal, which is nice, isn't it, Sam?
It's very nice because it can be done, without having to order it, wait for the actual appraiser to get there to appraise it, then the lender to review. It's almost like it's like a one-step process, and it definitely does save, maybe a little bit of stress when the lender can do that right away and it works out.
That's great. Yeah. I know that appraisals typically cost, around $400 plus HST, sometimes even more. If your property is a rental property, say it has a few different units, 2, 3, maybe it's a fourplex, then the appraisal can cost more then. But it is something that's required a lot of the times to transfer your mortgage, just to confirm what your home is worth. A lot of the times, the lender also wants to use the appraisal to confirm the condition of some important aspects of the physical attributes of your home, such as your roof, and making sure that your shingles are still attached to your roof. So another fee that we wanted to talk about was assignment fee. And we don't really see that one often, but it is listed in some of the lenders' small charges, isn't it, Sam?
Yes, yeah. So again, like you're saying, we don't see this too often, but some lenders that we work with do have it listed in the charges, and it helps to cover the switch from your existing lender onto your new lender.
That's right. And another fee that we have to add today is title insurance. A lot of lenders now require it. I think every lender in Canada does. That's a major banking institution. So having title insurance is really important. So if you are transferring your mortgage and you don't have title insurance right now, the lender you're getting your mortgage with will require you to obtain title insurance. So that could be an additional cost. And that's usually around $300-$400 as well, plus HST and all that. And will come out of your transfer. Now with all of that, Sam, I know that those are costs involved. I know that, let's look at the next item we have. I know that costs can be very heavy. They can make it a really difficult time to make the choice. Is it going to be worth to transfer my mortgage over? The rate is better, but there are these costs. Tell us about some of the options clients have to mitigate some of these costs.
Yeah, absolutely. There's definitely a silver lining because a lot of lenders do have, promotional terms or some rebates that they're willing to pass on to the client for the new business. So we do see that some lenders will cover or maybe even waive fees that you would typically have to pay. Again, from the list that we just shared with all of the different costs, it'd be lovely if the banks would cover the penalty. We don't often see that covered. But for certain things like, the appraisal and sometimes even the discharge fee or sometimes legal fees, all of these things are things we have seen in the past, right, Joe?
Yeah, they really are. They are really good promotions that come out, and all sporadically too. It's not just at one
Mm-hmm.
time all the lenders come out with the same promotion. A lot of the times there'll be one lender here that's running this promotion for 1 month where they're covering your appraisal fees and rebating them back to you after closing. Sometimes there is a lender offering to pay the legal fees that are required to transfer your mortgage over. And even times there are lenders that are providing the full rebate on the entire amount of costs, and that would be the legal fees required, the appraisal fees required, the discharge fees required. So it's when we run into lenders like that that are also offering a really good rate that, maybe your bank may offer a better rate, but are they also offering all those other incentives in addition to that that really make the offer very competitive? And in addition to that, yes, you're right, Sam, there are cashbacks in addition to the cost being paid at times that can end up in the client's account, which makes it even more lucrative to transfer the mortgage.
Exactly.
Yeah. So I guess that runs into point five. Is the cost worth it? So in this case, if the rate is lower, which we won't recommend a mortgage to you as a client if the rate is not lower, and it won't put you in a better economic situation. We've seen that happen before. But if it is lower, we'll try to show you how much you will save, as well as how much you'll be able to receive back in benefits and promotions, if there are any, and if there are any cashback promotions. So it really becomes a specialized situation for every client. I know, Sam, that every client has a unique scenario, and a lot of clients don't really fit with the same lender. So a lot of the times we need to look at, you know, how does the client fit the lender and the promotions available? We want to make sure what's best for the client.
Yeah, absolutely. There's lots of things to consider. But again, we do find typically if it is a lower rate,
Yeah.
we can look at it at a more, specific scenario for exactly what you're looking for. But we do find usually the transfer costs up front are worth it for the savings you get if you're able to get into a lower rate. But it's also worth noting as well, if you do time it and you can time your transfer to a new lender at the same time as renewal, it really can help you with that penalty, especially if you are in a fixed rate and you know what, it's something that's doable for you to wait for that renewal date. Then we can often put that together for you and set the timing up so that there's no penalty fee charged to you.
That sounds great. Yeah, there is usually a penalty as well, unless you do wait to that renewal date. So definitely
Mhm.
make a note of that date. You'll find it on your annual mortgage statement, and have your lender reach out to you, make note of the renewal offer that they're offering you, and reach out
Mhm.
to us to see if we can figure out a better, more competitive rate for you. In the meantime, Sam, that kind of concludes our session on how much does it cost to transfer your mortgage on Canadian Mortgage Weekly. So that's great. As
Mhm.
we now transition to the next section of our show, which is all the news. So, Sam, I know we have a lot to talk about today. We had the big announcement yesterday from the Bank of Canada. So let's
Mhm.
get right into some of these statistics that we have. I would like to talk about with you.
Yeah, absolutely.
So I can see what you got there. It
Here.
looks great.
Awesome. Yeah. So part of our norm we cover, of course, is the 5-year bond yield. And again, this helps us track where that 5-year fixed rate, is headed, and if we get an idea of, what it's doing in the market currently, because we do see it quite closely tied to what the 5-year fixed rate is. And currently, the bond yield is sitting at about 3.19%. So you can see that there was a slight dip in that bond yield. It really has stayed above that 3% range, since the start of June when we saw it break that threshold. And it seems to be kind of, steadying and leveling out in a bit of a tightening range there at the lower 3% range.
It is tightening there, and it seems to have met some resistance there with the previous high set in March of this year. We'll have to see what happens going forward, though, because the Bank of Canada did do that surprise announcement yesterday where the rate was increased quite dramatically in comparison to some of the sensational articles even we were seeing put out there talking about a 75 basis point increase. So we'll see. And we also are seeing a little bit of talk now about peak inflation, a little bit of talk now about the US maybe starting to lower rates going into 2023. So all that is going to have an impact on the bond yield. I'm just not sure it's ready to stop going up just yet, but very interesting to watch this graph into the summer here.
Yeah, it'll be good to track where we do see it enter, especially with, like you're saying, the announcement that was released yesterday. And, as we're heading into the summer months, transitioning into that fall market, we'll have to keep an eye. As we typically see the market heat up a bit in the fall, we'll see what effect that has on the bond yield and vice versa.
Yeah. You bet. Yes. With the market heating up in the fall, that does put pressure on rates. So we could see that impact the bond yield. Moving on to the CDOR rate, that is another key metric we like to follow here on Canadian Mortgage Weekly, and it helps us determine whether or not the variable rate is a good option. Now, looking at the CDOR rates, I know last week we were looking at variable being a good option, but where do we sit at today? Are we still seeing variable as a good option in comparison to fixed? Where are we at with this today, Sam?
Yeah, absolutely. So, we did see the CDOR rate increase again to 2.78. It's been on a steady increase for the last little while, but the biggest consideration and factor to look at is with the Bank of Canada rate announcement, we did see an adjustment to the prime rate. And the way that we can analyze the CDOR rate is looking at its variance from prime. And currently, it is still under 2%, which does indicate to us that the variable rate is still a good option. We'll have to continue to track the CDOR rate because it is getting quite tight with the new with the new variance from the prime rate. So currently, the statistics and the data is letting us know that it is still a good option, but it'll be something to look at for the future now that we've seen this change.
That's great, Sam. Thanks for going over that there, because with this recent prime rate change, this is going to affect some of these variable rate mortgages going forward. However, glad to hear that. Something similar to what we were talking about this morning, we had a client actually call in to discuss whether or not a fixed or a variable would be a good option. So after discussing it with you, Sam, and discussing the CDOR rate, I'm still on the same page. I'm glad I'm in a variable rate now myself. So looking at the next thing here would be the Bank of Canada interest rate announcement. And let's talk about this here. Let's talk about how we ended up here. So we were thinking that we were going to have an increase yesterday, weren't we, Sam? But I think the increase the increase that we expected was maybe 50, maybe max 75 basis points.
Yeah, when we were reviewing, news outlets and economist reports, I feel like the gross sentiment between most people in the industry was again at least a 50 basis point increase, but a high likelihood of a 75 basis point increase. But we did see quite a change from the Bank of Canada when they made their announcement. It I think definitely shook a lot of people that, you know, maybe weren't thinking that they were committing as much. We had seen
Yeah.
the States have that 75 basis point increase, and I think a lot of people just assumed Canada would follow suit.
I think a lot of people did assume that Canada would follow suit, including myself here, because
Hmm.
I've really seen Canada follow suit in those steps there in tandem with the United States fiscal policy. However, increasing a the rate by 100 basis points, it meant one of a few things to me. It meant that either they're catching up at the moment and they feel like inflation's a little bit out of hand, more so than the
Hmm.
United States, so they need to play a little bit of a catch up, or maybe the positive silver lining in me thinks that, well, maybe they thought that they would do a 75 now, and to avoid any future increases, they just tacked on a little bit of an extra quarter at the
Hmm.
moment to buffer a future rate increase. Now, I'm not sure if that's even was in the cards, if that even works,
Hmm.
but uh, it's just it leaves me wondering, or maybe just our inflation is just so crazy that we needed that higher increase. We'll have to see. We'll have to see.
Hmm.
When's the next announcement here? I know that the next announcement, I think we were talking about it's in September there. So we'll have to see about what happens there when we get to that point in September.
Yeah, absolutely. I believe it's September the 7th. So we'll have to see again. We get a bit of a break in August where, any mortgage holder who are seeing a change in their variable rate mortgage or any
Yeah,
other loan that's on a variable rate, you do have the month of August to get things established before we see what the Bank of Canada does on September the 7th.
that's great news. Okay. So a little bit of a break here as we wait until September. So moving on for the national house price update. Now, we've been interviewing a lot of real estate agents here, Sam, over phone and in person. Just having a lot of conversation recently with a lot of realtors from the southern Ontario market, as well as our local market, Barrie and Aurelia here.
Hmm.
And it's been interesting because uh, we're seeing what's happening with the housing prices, obviously, as per the graph. But however, a lot of these agents are saying that there are strong pockets, there are
Hmm.
strong houses that are selling quick, but there also are the houses that are sitting. So I wonder if this is completely accurate. I'm not sure, but at the same time, it's interesting to see because we're looking at last year's pricing now.
Yeah, absolutely. We've seen quite a steep decrease, and again, those conversations with realtors have been interesting because, I think they're noticing the sentiment that we've been seeing as well, where houses are remaining on the market longer, and the consumers have a bit more choice, and that's where we're seeing the market still strong in maybe some nicer homes or newly renovated, in our quote from our conversation last week, um,
Yes.
that they're able to have a bit of that choice, right? Earlier in the spring when the market was not in the buyer's favor at all, we saw everybody just taking what they could get for the prices. But now that we're seeing a bit of a softening and a bit of a lull, it does give those consumers a bit of choice, which impacts the markets of houses that are active versus a little bit less active.
Yeah, I totally see what you're saying there. It's going to be interesting to see what happens in the future. We'll keep an
Mhm.
eye on this average national home price metric. In the meantime, if you're looking to speak with a local real estate agent, Sam, Terry Lynn, and myself are connected with realtors across southern, mid and southern Ontario, and we can refer you to someone that can speak to you with your local market in mind and sit down with you and talk with you about where you're at with your home journey whether or not you're selling or buying, and we can get you in touch with somebody like that. But in the meantime, I mean, that was a lot to talk about. We have a lot of information we just shared. If you as a viewer are thinking, wow, I'm really confused, I really don't know what to do with the rates, what's happening with the home prices, and I need to talk to somebody, well, give us a call, send us a private message. We'd love to meet with you. Sam, myself, or Terry Lynn, we can set up a time and go over your specific mortgage plan and set up how your financial goals and your home ownership goals will tie together. But in the meantime, Sam, always great to have you on the show. 2.5 years now in the mortgage business. Thanks very much for being here today on Canadian Mortgage Weekly Live. You originally moved here from Ottawa, and it's great to have you on the show today.
Yeah, thanks so much for having me. It was a great topic to cover. And again, like you're saying, there was a lot of information. So again, thank you, Joe. You've been in the industry yourself for, just coming up to 12 years soon. So, sharing a lot of insight on the mortgage industry and its effects on the local and Ontario-wide market. So thanks again for having me on the episode.
Oh, thanks very much, Sam. Join us next week, everyone, here, because we have a lot in store here on Canadian Mortgage Weekly Live, Canada's weekly video mortgage news podcast. Next week, we'll be talking about how to negotiate the terms of your renewal. If you're one of these folks that really doesn't want to use a mortgage broker and doesn't want to talk to Sam, myself, or Terry, then we're going to give you some of the strategies you can use to negotiate with your own bank if you want to put in the time and effort to do some of that yourself. So join us then. You'll be able to get some free advice on how to do that sort of thing. We'll gladly share it with you. So until then, thanks for watching, and we hope you have a great day. Yeah, and we'll see you next week.